Listen to AM 560 The Answer online at 560theanswer.com, on the AM 560 mobile app, on your Alexa-powered smart speaker, and on TuneIn, iHeart, and on Odyssey. This is Chicago's Morning Answer with Dan Proft and Amy Jacobson on AM 560 The Answer.
Top of the morning, Dan and Amy. We mentioned this generally a bit earlier, but just to be specific, this new rule that goes into effect May 1 that raises mortgage fees for borrowers with good credit.
Yeah, like myself.
To subsidize higher risk borrowers or borrowers with credit that's not as good. Home buyers with good credit, with good credit, a score over 680, will pay about $40 more each month on a $400,000 loan, and upward depending on the size of the loan. Those who make down payments of 20% on their homes will pay the highest fees.
What?
Those payments will then be used to subsidize higher risk borrowers through lower fees.
So
Right.
wait.
Act responsibly, get punished. Exactly.
So this is as of May 1st for people who already have mortgages, or these are new mortgages?
New mortgages. The Federal Housing Finance Agency Director, Sandra Thompson,
This pisses me off.
is ripped from the pages of an Orwell novel. The rule will increase pricing support for purchase borrowers limited by income or by wealth. Yes, it will. You know, there's nothing worse than a home buyer who's limited by income or wealth. But, you know, I want it. I just don't have the income or wealth. We can help you out there. You don't have the money? I mean, they're like Carlton Sheets. You don't have the money? We'll get you the money. Just no money down, and you buy the property somehow, some way. Oh, right. You just redistribute. It's just, it's really, I don't know. It's such a nice, neat example of this abstract concept called income redistribution that a lot of people don't have appreciation for. Maybe this will make it a little bit more concrete in the minds of some. I do the responsible thing. I do what they tell me to do. I play by the rules. 20% down, meaning I'm buying a home I can afford, and I get punished for it. I get penalized for it. That's what we do with these government kleptocrats these days. Chris Whalen is investment banker, chairman of the Whalen Global Advisors, LLC, author of Ford Men from Inspiration to Enterprise, and editor for the Institutional Risk Analyst. Chris Whalen, thanks for joining us again. Appreciate it.
Good morning. Good morning, Dan. Good morning, Amy.
This is a wonderful rule. It's going to prop up the housing market, right?
I know. You're right in my sweet spot here, guys. You're in mortgage land this morning.
Yeah.
Yeah, Sandra Thompson is a nice lady from Chicago.
Of course she is.
Worked at FDIC. Oh, yeah. She's one of yours, Dan.
Of course.
Worked at FDIC, worked at the Resolution Trust Company, worked at Goldman Sachs.
Oh, smart.
She's actually a reasonably competent agency head, but since she got into office, she's been doing the, accessibility Watusi. And this weird change she made in what's called loan level pricing. This is pricing that they put on top of the basic requirements for Fannie Mae and Freddie Mac. And they kind of sort of help some of the low-income people at the expense of the more responsible people you were just describing. But then they didn't help others. It's so weird watching progressives struggle with finance because base 10 arithmetic is not natural to them. And so, the obvious things that they should have done 2 years ago, they haven't done to help low-income families. We still have pricing that goes back to 2008, which was intended to prevent people from accessing lower interest rates to protect Fannie Mae and Freddie Mac. Remember, we have to protect the GSEs before we protect low-income families. So
is it?
This whole thing is a train wreck.
Yeah, it doesn't seem like a great idea to sell homes to people who can't afford them. I think we've been here before.
Oh, yeah, this sounds like 2008, doesn't it?
But I try and explain this to them, but they don't care. You see, progressives are all about the press release. They don't care about whether or not putting somebody into a house at the top of the market ultimately will destroy them. and result in a default and a bankruptcy and everything else, and then they're gone.
Their
They
feelings,
have zero.
So
yeah, their feelings don't care about your math.
right. So why would I
No.
aspire to have a high credit score? I mean, 670, I wouldn't have to pay the 40 extra bucks a month to subsidize for people who have bad credit, right? 680 is the
Well,
magic number. They just came up with that, like they did with COVID
yeah,
numbers and
that's right. They drew a line across the page, and they didn't really look at the numbers underneath the line. But it's a sad situation. Sandra Thompson is a lot smarter than this, but she's playing the current cast of characters in the White House, led by Joe Biden. Let me give you an example. If you're a poor family and you go out and you call the wrong lender, let's say you go to a bank and you look for a first-time home buyer mortgage from FHA, if they decline you, that becomes a scarlet letter in their little computer system. You will never get credit ever again. Okay? And I'm talking about the lowest, quartile of income groups, Hispanic and Black families, and the Biden administration does nothing to help them. It's like getting a big stamp on your credit report that says no, go away. Okay, that's the equivalent, and yet they've done nothing to change this. I just wrote a column about this for National Mortgage News, and yet they'll sit here and talk about helping poor people, helping first-time home buyers. It's nonsense. DC is totally dysfunctional, guys. I don't care which party you're in. Getting things done nowadays in Washington is almost impossible. That's what a mess it is. It's almost like we should just burn the city down and start again. It really is.
Yeah, well, I mean, not literally, but you could say that about a lot of places, that it's time to
Okay.
start from scratch.
Jefferson would agree with me.
Yeah, well, yes, he would. I saw that First Republic, which had to be saved by the big banks
Yeah.
coming in, shed $102 billion in deposits during the first quarter of this year.
Yeah.
That seems like a lot of money. Where are we with any possible banking crisis that extends beyond the couple high-profile failures we've seen?
Well, the immediate surprise and kerfluffle of first Silicon Valley Bank and Signature Bank failing has quieted down. But what's going on now is that a lot of banks are having to reprice their entire business on the fly. And some are doing it, like I just wrote about Bank OZK, formerly known as Bank of the Ozarks, really well managed commercial lender down in Little Rock. And then you have First Republic that's flat on its back. I'm looking at their financials right now. I had somehow avoided looking at them until this morning. It's now ruined my day. And this bank is in serious trouble. I think it's going to have to get bought for whatever it's worth. It's at 0.1 of book value now. So it's not worth a whole lot. You can probably have the bank for nothing. Just assume the deposits remain.
But to tell us more like 30,000-foot view of the sector, what's happening?
Well, for now it's okay, but banks are going to have to sell a lot of the securities and the loans that were created during COVID with those really low interest rates, and they'll take a loss. But the good news is the ones that are strong enough to do that and can go out and reinvest in a mortgage at 5 or 6 or 7% will be okay. But we're going to see a lot of banks get bought. We're going to see a lot of arranged marriages. Not the big guys so much, but I'm telling you, earnings are going to be tough in the next couple of quarters because, they're competing with the U.S. Treasury. Treasury's paying 4% this morning for 90-day money. Most banks are not even at half of that. So they have to very quickly close that gap, or they got to go find something else to do with the bank. That's it. This is tough love from the Federal Reserve Board in Washington.
I wanted to get your take on this observation from a trader friend of mine. He essentially argues that what the BRIC countries plus Iran are doing right now is plotting to create a commodity-backed or gold-backed credit note, basically a functioning currency. They're not doing it for political reasons. They're doing it because they're scared of the value of their dollar holdings, and they look at the size of our debt, our irresponsible governance, and our self-inflicted destruction of the dollar, and they see an opportunity as well as a hedge, as well as a necessity to hedge. And so the peril the dollar is in may be more imminent than some people believe. What's your view?
I think that there is a cottage industry that's trying to sell that view, but the role of the dollar ultimately is tied to commerce. If people use the dollar to buy and sell stuff like oil, which is really big, then that's fine. It's not a store of value. I think only fools would view U.S. currency as a store of value when you look at the inflation rate.
Mm-hmm.
But most of these countries that you mentioned are subject to sanctions, and so they've had to go start their own little ecosystem to get away from the U.S. sanctions regime. And this is Russia, obviously. The Chinese are facilitating this. And that's fine. Let them go. But, Russia could back its currency with gold tomorrow, 100%. Do you think people want to keep their money in Russia?
No.
With Vladimir Putin? No. Do you think they want to keep their money with Xi Jinping in China or in Iran?
Hunter might.
No. So, he may have to.
Right. He might not have a choice.
I hear he's hiding at the White House so that his love interest doesn't serve him. Isn't that amazing?
And he runs to Ireland with his dad, to hide so that he doesn't have to cough up more cash for the love child.
Oh, boy. Yeah, that scene in Ireland was like right out of a movie, wasn't it?
Oh, my God.
I could just picture him in Dublin with a pint in his hand.
Yeah, the Banshees of Inisherin. That's what it was, a movie right out of. And he's the Colin Farrell character.
An unwatchable film. What happened this year with Hollywood?
No, that wasn't unwatchable. Oh no, I disagree. Listen, stay in your lane, Chris. You don't come into movies. You don't come into movies and culture here.
We tried.
So I mean, as long as half of the commercial transactions in the world are done using the dollar is not going anywhere.
Yeah, I would tell you that most of the regimes that pretend that they're going to create a alternative to the dollar are far less solvent than we are. Even with all of our funny money debt, the U.S. economy is still in much better shape than the rest of the world. So we keep trying to screw it up. Don't get me wrong. Our progressive friends are bound and determined to destroy the bond market. But as long as we do have a market for raising cash for financing economic activity, we're way ahead of the rest of the world.
The Fed you mentioned. If there was a way, there is a way to combat inflation without the mystics at the Fed, isn't there? If we jump-started domestic energy production.
Well, there's many things we can do exactly to support lower inflation and higher growth. But we've got to go back, the 50 years from Humphrey Hawkins, and we got to get the Fed out of the growth game and just have them focus on price stability. Mm-hmm. We have enough inflation coming from the Treasury right now. They don't need help from the Fed. And I think the inability of Congress to refocus on this law, this 50-year-old law, and rebalance it for today's realities is a problem. Because the manic behavior you see from the Fed, fight inflation, full employment, fight inflation, full employment. It's an increasingly volatile cycle that we're in, and it's causing problems. The reason we had major banks fail is because the folks at the Fed were embarrassed and felt like, we got to fight inflation now, and they try and do it in a matter of weeks and months, which is not really possible, and it puts all kinds of stress on the economy and on banks, as we saw, right? So everyone's in a hurry. The equity market wants the Fed to defeat inflation today, so we can go back to a 20% a year bull market in equities. So everyone's in a hurry, and that creates volatility in the markets and uncertainty and fear. So I think we need to rebalance economic policy and just have the Fed worry about the dollar and price stability, and then Congress can worry about goosing the machine in terms of growth. And that's the way it's supposed to be. But, Humphrey Hawkins was a strange law that we passed in the 70s when we thought we could legislate economic reality. And now I think we probably see that we can't legislate everything.
I'm not sure that the MMTers believe that. Unfortunately, I wish they did.
Well, notice how MMT disappeared as soon as Jerome raised interest rates. Poof, gone. I'm sure there's still some consultants out there planning conferences, but it's hard to sell unless you have zero rates.
The commercial real estate contagion, that's a question mark, not a statement. We see in Chicago about half of downtown office space is going unused. I think Jones Lang LaSalle said about the vacancy rates about 20% in most of downtown Chicago. What happens there? How does that unwind?
Well, you have the actual vacancy rate, and then you have the real vacancy rate, which is carefully curated. I would say double the vacancy rate in most legacy cities, and that gives you a closer view of reality. And then when we talk about vacancy rate, they'll say, well, such and such space is let. But is it used? Are there people on the floor using the office space? If not, when that lease comes up, it's going to go. And you see this in San Francisco in particular. It's very extreme in San Francisco. So I don't think this ends well. I think all of those properties get restructured. And then, the progressives will say, oh, well, we should turn it all into residential. But the problem is that these cities don't work unless you have commercial businesses paying the bills. You can't just turn Chicago into a residential, skateboard park. No.
And you know how sad this is? Like state employees, my friend works for the state, and they got an email last week that says they have to go back July 6th. They have not been back in the office since March of 2020. And they have 3 floors that are just sitting empty, and they're not even paying rent on anymore because they don't need to. So, I mean, this has changed. The whole COVID has changed everything.
But don't worry, Chris. The people's business has still been getting done by those dutiful state workers.
Yeah. Oh, please. New York is years behind. But here's the thing. During 2008, 2009, we had what we called jingle mail, which was when the owner of the house mailed the keys to the bank. Now we have tenants, big commercial tenants, giving up on whole buildings and just walking away. Yep. You have Elon Musk, not paying his rent. And it's not that he can't pay his rent, but he just decided not to because he knows the building is a zombie. He knows he has endless leverage with the landlord. And keep in mind, most of these big buildings are financed at 50%. In other words, you have to have 50% equity, 50% debt. If the value of the building goes down and we wipe out the equity, then the bank's going to turn to us and say, hey, you got to put more equity in to bring it back to 50% at the lower value, right? A lot of big investors, the Blackstones and the rest of them, will do the math, and they'll say, no, sorry, we're not interested, and they'll walk away. The city then owns the building. Ugh. So what's going to happen in a lot of these cities, Dan, is
a lot of white elephants.
No, the cities will end up owning the real estate, and nobody will want it.
Right, white elephant.
Yeah, the only use could be residential, but you got to knock the building down.
Right.
That's very expensive. You can't convert a commercial building to resi.
Everyone's going to share a bathroom on every floor. Well, the building we're in had 700 plus people. Now we have less than 200 on a daily basis.
No, Amy,
people aren't back
it'll
at work.
be like Dr. Zhivago. We can get to know one another better. We can cook together.
It's going to be wonderful. It's going to be so romantic.
We'll put a hole in the roof so the smoke can escape.
It's gonna, it's gonna be like Les Mis. We're a Parisian loft living. It'll be fun. We'll be dancing and celebrating and drinking wine. It'll be happy days. Sure. Okay. Right.
Install a lot of showers.
Yeah, just as Klaus Schwab envisioned. All the fairy tales are coming true. Christopher Whalen, investment banker, chairman of Whalen Global Advisors, author of Ford Men, From Inspiration to Enterprise, and editor of the Institutional Risk Analyst. Chris, thanks as always. Appreciate it.
Have a great day.
Thank you. And he joined us on our turnkey.pro answer line.
You've made the switch, and it feels so good. You switched to Chicago's Morning Answer on AM 560. The Answer.
There are over 10,000
AM
reasons why
560.
steel is not sold at Lowe's or the Home Depot. There are over 10,000 authorized local steel dealers. Find yours at steelusa.com. Lowe's and the Home Depot are trademarks of their respective companies.
Freedom and liberty are important to all of us in Illinois, from Rockford to Carbondale,